Welcome back. Picture this, it's Saturday morning. You've just survived the Friday night pizza rush, your fryer died mid service, and now your finance inbox looks like a paper avalanche exploded inside it. Mainline distributors, liquor reps, local farms, utility companies, dozens of invoices, all demanding your attention. Somewhere in that mess is a line item for tomatoes. Simple, right? Except you need your system to automatically know that tomatoes belong in food cost, not linens, not labor, not some mystery account. This is the daily chaos that modern invoice automation was born to solve. The big question is deceptively simple. Can software look at an invoice the way a trained finance teammate does? Not just read text, but understand what matters. This piece explores how OCR invoice processing combined with AI is transforming restaurant accounts payable from a manual, error-prone chore into a fast, structured digital workflow. So why should you care beyond the headache? Let's talk money. Restaurant labor costs are crushing operators right now, eating up 30 to 36% of your sales. Every hour your team spends manually typing invoices is an hour they're not negotiating better vendor terms, not analyzing your food costs, not planning your next location. If your accounts payable team is manually crunching those invoices, it's not just a tedious chore, it's an expensive nightmare. Industry data reveals something shocking. Manual invoice processing costs between $15 and $40 per invoice. But with AI-powered OCR, that drops to under $5. That's an 80% savings. By 2026, research shows only 8% finance teams will still be manual. The rest, they'll be automated. The gap between you and your competitors is about to become a chasm. The question isn't whether you can afford to automate, it's whether you can afford not to. Now you might be thinking, wait, we've had OCR for years, and don't we already have EDI for this? Here's the gap. Traditional OCR is like a scanner that can read words but can't understand context. It sees tomatoes but doesn't know if that's food cost or some obscure expense code. Legacy systems use rigid templates, so when your local produce vendor changes their invoice format, everything breaks. Then there's EDI. Electronic data interchange is great. It's a perfect digital handshake for your massive broadline distributors. But here is the massive gap. What about the local produce farm? Or your specialty baker? That long tail of local vendors represents 80% of your invoices, and they're handing you crumpled papers and messy PDFs. And here's the restaurant-specific nightmare: unit conversions. When your vendor sends one case, but your inventory system needs 24 bottles, or 10 pounds, but you track by ounce, simple OCR just stares blankly. Neither manual entry, nor brittle OCR, nor EDI alone solves the full problem. That's why restaurants need more than character recognition. They need intelligent interpretation. So what does the solution actually look like? The best OCR for invoice processing isn't just software. It's a hybrid intelligence system. It starts with capture. Invoices arrive however they arrive: email, PDFs, scanned receipts, uploaded files, even photos snapped on your phone. Then OCR converts the document from image to text and reads every character. But here's where it gets smart. AI mapping interprets the layout and understands intent. It doesn't just read the words. It knows that line 7 with Roma tomatoes belongs in your food cost ledger, not some random expense bucket. But wait, it gets better. Dedicated support teams handle the nasty stuff. Unit of measure conversions when your vendor says case, but your inventory tracks bottles. That human-in-the-loop layer matters, especially for tricky conversions. The system validates against purchase orders, checks totals, then flings the clean data directly into your ERP. And when the AI isn't 100% sure, it flags only that invoice for human review, while everything else keeps flowing. This is why modern systems crush legacy approaches. They're not just reading, they're understanding. Let's talk results, because this is where it gets exciting. Once that workflow is in place, the findings are straightforward and powerful. First, speed. Invoices that used to take days now process in minutes. Processing time drops from days to literally minutes. Second, cost. You're looking at 80% savings, dropping from $30 per invoice to under $5. Per invoice handling costs that often sit in the $15 to $40 range manually can shrink to under $5 with automation. Third, accuracy. Field-level accuracy above 95% means those phantom variances in your food cost calculations disappear. Suddenly, your theoretical versus actual costs align because data entry errors are gone. And here's the kicker: this scales seamlessly whether you're processing 500 invoices or 50,000. For multi unit operators juggling dozens of locations, this creates a single source of truth. Your POS, accounting, and inventory systems finally speak the same language. That labor you were burning on data entry, it transforms into strategic firepower for vendor negotiations and expansion planning. These aren't incremental improvements, they're game changing breakthroughs. So, what does this actually mean for your restaurant's day to day operations? The implications spread far beyond the AP desk. It means your CFO moves from being a data entry supervisor to a strategic commander. With instant invoice processing, you get real time cash flow visibility across every single unit. When invoice data is captured quickly and coded correctly, restaurant groups get sharper control over food cost, more reliable actual versus theoretical analysis, and cleaner visibility across multiple entities and locations. You can catch a price spike on tomatoes immediately, not 3 weeks later when you're wondering why food cost is blown. That matters because even a small invoice coding error can create fake margin variance and send operators hunting for a problem that doesn't exist. Your AP team, freed from keyboard drudgery, can focus on vendor strategy, maybe negotiating better terms or spotting that you've been overcharged on bread for 6 months. Better data also improves payment timing and expansion planning. For multi unit operators, this is revolutionary. Clean intercompany transactions, real time reporting across brands, and the ability to make pricing decisions based on today's costs, not last month's mistakes. You stop reacting to financial chaos and start controlling it. That's the difference between surviving and thriving in hospitality. Now, here's the paradigm shift you can't ignore. By 2026, AI driven OCR isn't a competitive advantage, it's table stakes. AI driven OCR invoice automation is no longer a novelty for restaurant finance, it is the emerging standard. Research shows that 92% of finance teams will be running mixed or fully automated workflows. If you're in that remaining 8% still doing manual entry, you're not just inefficient, you're obsolete. But here's the nuance: the definitive back office isn't OCR alone, it's a hybrid. The strongest operating model is not OCR versus EDI, but EDI for high volume structured partners. That's a direct digital handshake, 100% structured data from your major broadline distributors. But for the 80% of your vendors, the local tomato farmer, the specialty bakery, the repair tech, you need OCR as your universal translator. Combined, they create a near complete digital workflow. The future isn't humans versus AI, it's humans and AI, each doing what they do best. Accounts payable stops being a room full of manual data entry and becomes a control tower for visibility, reconciliation, and operating discipline. The restaurants that win will be the ones that master this hybrid approach before their competitors do.